Welcome to the Pip Talk podcast. I'm your host, Cavell,
And I'm your host, Jacob.
and I hope you're all doing well. We start this week being accompanied, of course, by Jacob on our second Pip Talk podcast, just going over a few topics, of course, with the coronavirus at large, with Great Britain, of course, officially being out of the EU, the changes that they're making, and most importantly, just the psychology of trading. I know there's been a few times, me and you, Jacob, over our journey. Oh, it's been quite a rocky one.
Definitely, man. definitely some moments to laugh at, definitely some moments to cry at, but always, wherever there's an L, there's a lesson in it. So, yeah, man, now that we can provide you guys with some reflection and some actual advice on trading as a strategy, yeah, man, we're here for that. So let's get into it, man.
Yeah. I think, the most important thing to always understand when trading is always understand there will be a next train. Okay. And notice I said train, not trade. Okay. If you was rushing to work, you got to the train station and you missed the next train, you could rest assured that there will be a next one. So it's the same type of mindset, attitude that you have to have towards trading. Okay. You may have a setup that was perfect in the sense of, it's met your criteria, but the only downside is you've missed the trade, you've missed your entry, and now the pair's up 20, 30, 40 pips, and you're now thinking, shh, I probably won't swear on a podcast, but you are definitely thinking, crumbs, price,
Sweat. Sweat.
price has gone away, and now unfortunately, like Jacob just said, the palms are getting sweaty, and the fingers are rushing you over to your MetaTrader, and you're jumping into the trade,
Mm-hmm.
and because you're then jumping straight into the trade, and like we've just said, there's always going to be a next train. That next train's come, which has gone right back down to your initial entry, which could have A, stopped you out of the trade, or B, taken you into a significant amount of loss that you hadn't anticipated, which could have also messed up your leverage in your account as well. So, I think the psychology behind trading is very important, man. We have to be true to ourselves and we have to be patient. This game, a wise man told me, this is a transfer of wealth between the impatient to patient. Do you remember that, Jay?
Yeah, facts, bro. So, yeah, what that means in regards to what I took from it is that don't do what retail traders are doing, basically. So, retail traders, they don't have a structure to the way they're seeing the market or even managing their trades, and that's why they have that. Oh shit, it's gone. Excuse me for swearing. It's gone 30 pips or it's gone 40 pips, and you're thinking, I need to get in anyway. You need to get out of that mindset because that mindset's dangerous. Because, like Cavell was saying, once upon a time we was fearing that, and we was just jumping in trades and thinking, yeah, man, it's gonna keep going, and then you might be up 10 pips or 15 pips, and then it comes crashing down 30, 40 pips, and you've been clapped, and you're just thinking, raw, why did I even do that? Why did I even get in? Because you had that stupid thought of, I don't want to miss the train. So it's very important to shake that out of your arsenal and don't feel like that, because even if you miss a setup, you're going to get another setup. So it doesn't matter. So just shake it off and forget about it. Do you know what I mean? Because it's not worth you taking a risk. If a trade's moved 30, 40 pips, right, you're then having to risk an extra 30, 40 pips on top of your stop loss, realistically. So are you willing to do that? And the answer should be no. So, just by going off of what Cavell said from the transfer from the impatient to patient, be patient, because you will get another setup and it will be worth the wait in regards to you having to then risk more than what you was willing to risk in the first place.
Amen. On the subject there of you mentioning Arsenal, 4-0 victory. Very nice and sweet, up the arse. But I was also going to say, I used to say it last year, the letter P. Now, this letter P, it's in control. It's at the forefront of every word that's important in the world of trading. Okay, you've got persistence, patience, which is the word that everyone hates, okay, patience, but also the word that everyone loves is pips, okay. As a trader, you want pips, but sometimes hate being patient to grab them. Patient pays, man. Being patient will always pay. And, on our side of the fence, like Jacob said at the start, we've taken a lot of losses, which we've been able to change those losses into lessons. And if you can, take L and flip it into a lesson, then you're more the wiser. It's really about, Sylvester Stallone in Rocky, when he says it's about how hard you get up after you get hit or something like that. It's the same, you need to be able to withstand blows. And, if you're jumping into a trade balls deep, risking 10 or 15% of your account balance on one trade, then quite clearly you're going to get knocked out in the first round, So it's definitely a marathon. Shout to my guy Nipsey. It's definitely a marathon, It's not a sprint. And that just means we have to make sure each trade, it's about compound, A good book I would tell you guys to read is The Compound Effect. And if you guys are in our Discord channel, in our mindset chat, we do have a link inside of there, which provides you with a ton of books, PDFs, over 50 books, very influential for you guys to use to aid you in trading. So I definitely would check out The Compound Effect if you haven't read that already. And also subscribe to this channel if you like our content. But with that being said, being patient pays, man. It really does pay. And one thing I did want to mention, actually, just before we step aside from the psychology of trading, is if you had, 10 chances to win something, we already know the definition of a madman's doing the same thing over and over again, expecting a different result. So if you had 10 chances to win something, whether it was a raffle ticket, whether it was a lottery ticket, anything in life, just 10 chances at something that you're interested in, you need to make sure that after the first and second and third try, if things are not going your way, you can reevaluate where you're currently at. So, again, going back to the risk management side, if you're, placing a buy each time at the highs and it's not working, you need to make sure that you can reevaluate what you're doing to just change a few tweaks here and there to actually have a smooth, successful journey. Because let's be honest, there's no successful journey without failing. And, me and Jacob know more than others. We've had to fail a lot in order to succeed.
Definitely.
So, right now where I'm at, if I sit on my hands, that's the hardest thing to do. But if the trade doesn't match my criteria on Monday, Tuesday, Wednesday, Thursday, or Friday, then I'm not in the trade. And that's fortunate for me, because it means I can then spend time doing something else, maybe spending time with people that I care about, or just building on things that's, on my to-do list.
Getting these gains, B.
Getting these gains.
Well, yeah, no, just touching on what Cavell was saying, it's definitely important to, if you're a scalper, this probably isn't going to resonate with you, I'll be honest, because you don't really have time to be patient. You're trying to catch the next candle or whatever. So this is more for, your swing traders / you don't mind being in a trade over a week and just holding out because you've got your take profit set and they haven't been hit yet. So patience pays for those who realistically, if you're acting on the higher time frames require you to be patient. So we're not really the intraday trader type. So we're not really, taking trades off an hour, 15 minute, 5 minute. We might be looking at entries, but we're not basing our actual moves off of those time frames, because number one, it doesn't really give you that pit count that you really want. And number two, you got to be a lot more active. If you're on an hour chart, you're on a 15-minute chart, you got to stare at that there's data being printed, every 15 minutes, every hour. I don't want to be looking at my trades like that. So if you're on the 4 hour, the daily, you can come back, we start our trading day at 6 a.m. We try and look for things, just before new London session opens, And, that's where we've had majority of our breakthroughs and realizing, okay, if things aren't lining up before a certain period of time, we're now going to have to wait till New York session. So we you know, just by us being active and being live, we can't force the trade in the morning. If the morning trade isn't there, wait for it. Like at the end of the day, we're gonna be doing this tomorrow morning as the market gets ready for the London session, first London session of the week. And if nothing's there, then it's not there. We wait. See what New York session holds. So just by us knowing that those are the biggest sessions, when you do your back testing and you do your analysis on these markets, you'll see that things are actually lining up around those sessions. So that's where patience pays in regards to us being, you know, aware of these things and having to make those mistakes of trying to force trades at, you know, times where it's not really going to line up. So definitely, you know, for those who are the swing trader type, the guys that do look for the bigger positions, you're going to understand that you're not going to get a trade every day. But when you do get a trade and your criteria is met, it's normally worth it. Do you know what I mean? And the times that you had to wait, it's normally worth it. Like last week, I traded Monday and I traded Friday. Didn't trade nothing in between because the pairs that I trade, nothing really was happening. In my opinion, the markets were kind of stale. So it's just knowing what you're in it for, knowing what your strategy is, waiting for your criteria and your checklist to be met, then pulling the trigger. Do you know what I mean? And that's really going to be the difference in regards to longevity in this game.
Yeah, facts. And moving away from the mindset side, just to give you guys a brief overview, what's actually going on at the moment with GB. So we've had, of course, the chancellor, or the now ex-chancellor, Sajid Javid. He's now resigned due to arguments and stuff he's had with Boris Johnson. But to put it in layman's terms, the new guy that stepped in, Rishi Sunak, he now must work out with Boris Johnson whether to stick to the budget limits that were set by Javid, or to very simply open spending tabs and start basically embarking upon spending a lot of money inside of Britain. Of course, the governor of the Bank of England, Mark Carney, he actually did come out and he did say that he's expecting the interest rate to decrease. So he wants to bring the interest rate, if not to zero, to a negative number throughout the year. And the reason why he would like this to be done is because we've just left the EU, okay, and spending at the moment is not high. Public spending, consumer prices, they're not high. So they need to inject cash into the economy in order to increase people like you and I to spend more money. So without them increasing our appetite to spending, they're not going to be making as much, which means they are going to lower their rates. They may, of course, now this would mean the rate of inflation would go up. So, you know, your pint of milk is now going to go up from maybe £1 to £1.10. But of course, the overall picture is, because we are outside of the EU, we are in, you know, uncharted waters. But the EU's also got their own problems as well. So I do think really if the EU went into a recession, I do think we would go into one as well, only because they are our neighbored countries, and you know, a lot of our business, if you think about it, Britain doesn't own anything. Okay, all of their business is done from outside of UK, realistically. So that means we rely on a lot of other countries economically to help ours. So it just means now from our side of the fence, you know, the pound should increase, okay, because you know we've got our own rights, we've got our own integrity. You know, everything seems to be that we've got our own independence. That's the word I was looking for. So it does mean that the pound should gain some strength overall, but you know, things could get very ugly over the next 6 months. So just be careful, guys. Make sure you're following our podcast. If you thank you for liking our content and subscribing. But make sure you've hit the bell for notifications, because when these videos come out, it's just good for people like yourselves to stay informed. I say people like yourselves, retail traders, okay? There isn't really any type of outlet if you go online that can give you everything. When I say everything, a fundamental outlook, a psychological outlook, and a technical analysis outlook, all in one place. And that you'll find at litcapital.co.uk as well as on our Discord channel. So, you know, if you guys stay informed, you'll stay in the know, which means you'll be one step ahead of the crowd. And, at the end of the day, we want to make sure that you guys can secure the bag, aka the moolah, aka the cash, because every day is money day. And that's me done for the week, folks. Jacob?
Yeah, man, just touching on what Cavell said for sure. Make sure you tune into Lit Capital, man. I mean, we're trying to provide as much content on all fronts as possible. So fundamental, tuned in with the technical as well. So just to touch on the GBP as well, the aspect, it's going to be a big week coming up for the pound to see what's going to happen in regards to inflation, how exactly we're gonna manage the economy, because it's not looking great so far for Britain. Yes, Brexit is happening, but we're miles off a deal with Euro, with the EU. Apologies, and yeah, it's gonna be tricky to figure out how we're gonna be booming economy wise when we're so far off actually agreeing anything. So. And I know we've got to the end of the year, and actually to deal with the Brexit process, but just by remembering what this Brexit process has been like, I'd take it with a pinch of salt in regards to what they're actually going to do, man. Like, I wouldn't be surprised if it comes to the end of the year and they start pushing deadlines back, because overall, I just don't really trust what these politicians are saying, man. Like, they say one thing and then they start realizing that some of the things that they want to implement, they can't really implement because no one's actually willing to negotiate and actually settle and agree on something. So it'll be good to understand, what happens with what Mark Carney's saying about reducing interest rates and stuff like that. And tying that in with technical data. We could see a big push down before we do get the bullish run that we're so anticipating. So it just depends, man. Definitely keep in touch, and have a great week all round, and stay in tune with what we're providing on our Discord.
Stay blessed. Remember, guys, every day is money day. Peace out.